Welcome to the Transparent FX Academy. I'm Nick, and I'm a top author and TradingView with over 190k reputation points. In this video, I will be speaking about GBPUSD. Now, as usual, to keep the video as educational as possible, first I will be covering the technical aspect for this market. Then we will be moving to the order flow by looking at the commitment of traders, so the COT data, so essentially what hedge funds and the big players in the market are doing and how they're shifting their orders. And by the end of the video, by using a combination of these two different types of analysis, we will try to understand where we have the highest probabilities for the next potential move here for this pair. So this is definitely a video you do not want to miss. If you're new to the channel, make sure to subscribe. This is the place to be for high quality, free trading education. Now, without further ado, let's jump straight onto the charts. Starting here from the monthly time frame, what we can see is that at the moment we have a market which is testing a quite strong historical monthly support and demand area. From here, in fact, all this previous rejection to the upside was created. Again here, the market tested its zone and rejected it to the upside. Again here, and again here. And what we can see is that as we're speaking, the market is currently in the process of rejecting to the upside again this exact same level, since we just had yet another test of the exact same zone. So in a situation like this, it seems like there is a good probability to see more potential bullish continuation, as already happened in the past when the market was testing and rejecting this exact same level. So let's keep this in mind and drop down on the weekly time frame. Now, from a weekly standpoint, the situation is quite clear. What we can notice is that the market has currently been moving in an uptrend, creating a series of weekly higher highs and higher lows. Now, in a situation like this, there is definitely the possibility of seeing more potential bullish continuation being created away from this level. We can also notice that as the market has created a new impulse to the upside, if from here the market is to correct, the first important structure level that the market would face is this one here, which is exactly the previous high. In fact, from here, the previous move to the downside was created, confirming this level as a strong resistance zone. Then the market broke above that zone, so that previous resistance is now turned support here. So there's a good probability of seeing a retracement to this area and then a potential rejection to the upside, essentially completing this weekly impulse correction and impulse pattern to the upside. Now, in general, after an impulse, if we want to measure the correction, we have to take our Fibonacci from the low to the high of the impulse leg, which shows us how we have at 0.32 and 50% retracement levels lining up exactly here. Now, if the market would correct to this zone, at that point, from here, there is a good probability of seeing more institutional longing, which at that point could further increase the probabilities of a potential rejection to the upside away from this level. Now, before we dig deeper into what we have here from a technical perspective on the daily, first, let's go and see what we have when it comes to the commitment of traders, so what hedge funds and the big players in the market are doing, and let's check the data precisely for the pound. Now, what we can see here is that just with the last reports, net positions have started increasing. In fact, we can see how we now went from having 47.8k net positions up to 67.5k net positions, with longs getting increased from 102 to 125. So currently we see a lot of longs getting added on the GBP from an institutional perspective. And keep in mind that if we're looking at the data for the GBP, we're actually already looking at GBPUSD, because all currencies on the spot are traded against the USD. So let's keep this in mind and move back to the chart. And by the way, if you still haven't, make sure that you join my free Telegram channel, which you find both on the screen and also linked in description, so you never miss new updates. Now back to the analysis. Well, from a technical perspective here on the weekly time frame, it is clear that if the market will correct this zone, this is a good area to see more continuation to the upside. But we have to now drop down on the daily time frame and see what we have from a daily perspective. Now, here on the daily, I did speak about GBPUSD quite a few times in the past. I spoke about it just a few days ago when the market was around here. I explained all the reasons for which we could expect first this break then a retest of this level and a rejection to the upside, which is in fact exactly what the market did. And by the way, I will link in description that previous analysis so you can go and check it out for more free education. But in creating this move to the upside, the market has now created a new potential pattern. In fact, what we can notice is that we have an impulse to the upside, minor correction. Now the market is trying to continue higher. Now, if the market will fail in continuing higher and print a push lower, that would essentially create an M pattern. And usually after the creation of an M pattern, the market creates a rejection higher, completing the M pattern at the neckline, which is essentially the previous support turn resistance. So from a daily standpoint, if from here we will see the push lower, that could easily create this daily M pattern, after which there is a good probability of seeing a potential push higher, completing the M pattern at the neckline. So if there is this push lower, what would I expect? Well, as usual, trading is reactive and not predictive. The monthly, weekly, and daily time frames combined with the CO2 data, those are the best time frames when it comes to the directional aspect of the market. However, when it comes to identifying early shifts in the trend of a market, the best time frames for that are the intraday time frames, so 4 hour and lower. Therefore, what I would expect is that if this market would shift from an intraday bearish to an intraday bullish market, at that point, I wouldn't be surprised to see a potential rejection to the upside, completing this M pattern at the neckline. That definitely wouldn't surprise me. Now, if you want to learn more, I really suggest that you go and check out the transparentfxtrading.com website. Here, you have the possibility to gain access to my entire all-inclusive mentorship program. This is the most complete all-inclusive mentorship program. You will see here a complete presentation of everything included, which is essentially all my courses, including the programming course on automated algorithmic trading. You also have the possibility to gain access to one-on-one private mentoring, all included in the mentorship program, the trading station software with the Telegram signals notification, and also the CO2 data software, which is essentially the one that we just used in this analysis. So everything all for lifetime access. And if you continue to scroll down, you will see that you will have the possibility after the testimonials to join and gain automatically access with the email and password that you will create during the sign-up process. So I really suggest at least to go and check it out at transparentfxtrading.com. You find the link also in the description, and I will see you in it. If you enjoyed the video, make sure to drop a like. Also, let me know in the comments below any pairs or topics that you would like me to cover in the next videos, and I will see you in my next breakdown.